Okay, so good morning, good afternoon, where are you from? So we're just going to start with an entry I had taken on gold while it was going towards the 1953 key level for sales. I'm expecting it to drop down to the 1945 key level, about 80 pips. So I think that's the trade. If you want to enter, you can enter right now. And also mind this line. This is where we're watching price for reactions. If price comes back to your entry, you could close at break even and look to re-enter. So how did I come up with this analysis? So we have to go towards the higher time frames. Could start with our daily. I know you're wondering what are these yellow lines. These are key levels, and I've made a video on how to draw them and how to plot them on your charts. So with fundamentals and technicals aligning towards your bias, you can be confident and enter. So just to take a glimpse over the daily is bearish. You could drop down to the 4 hours. As you can see, gold is in a tight range, and if you're an intraday trader, I'd take entries over here down, but since this is a scalping session, we want to take trades in the medium term zones, and we will use what price offers us during the session. Okay, so I execute on my 1 minute. So whether it's price action, market structure, trends, or key levels, the main denominator between them is time. All market structure does for us technically is make it easier to visually address a trending market and how to take advantage alongside the key levels, price action, fundamental sentiment to provide more confidence, more confirms, and more efficient entries. As of gold, fundamentally speaking, we are stuck in this range since we don't have any new FUD. FUD is fear, uncertainty, and doubt in the market, or any new headlines that would cause gold to break out of its tight range on the 4 hour. As you can see, we have a tight range. Price is still bouncing. As you know, during the FOMC last week, Jerome Powell skipped the interest rates, and that's why, and say that whether they'll increase it or decrease it, it's based on data, it's data dependent, and we're expecting 2 more 25 basis point rate hikes throughout the year. So that's fundamentally neutral for gold as of now, but you can take advantage of technicals and understanding lower time frames, order flow, reactions at key price points of interest, and understanding sentiment right now is neutral. Volume during sessions, actually I shouldn't have taken this trade. I was just what can I say, greedy, since I only take trades during the New York session, and the New York session is not yet here. So this is just pre-market analysis. So if price breaks below this area, we can expect it to drive down towards 1945, where we can look to close our position and watch the reaction there. But before we reach, we have areas of interest. We have 1948, we have 1947, before we get to 1945. So if price flawlessly breaks through, we can hold the trade. But if we see market structure reversing around these areas, then we can look to manage our trades. So depending on your risk management strategy, so mine is I usually take a 1 to 3. That is what I am content with, and any other extra pip is, what can I say, a blessing, but we'll just look to understand market structure and manage our trades based on that. So that's for gold right now. You can enter this trade with me, or you can wait for a retest of the 1953 key levels. As you can see, okay, let me explain the entries that I used on the lower time frame. So when you dive on the lower time frames, there's a few things you have to understand. At the end of the day, we are just watching the action of price, but on the fastest time frame. You can observe candle reactions, which is the 1 minute candle creations. The candle creation and generation of candles is everything for us in terms of being technical traders and reading movement of price. Also, the size of candles, how they form, and consecutive patterns of candles. This is everything in terms of visual representation of what is happening to the story of price. So the lower time frame is just zoomed in version of the time frames above it. You just don't want to memorize patterns such as order blocks, break below, double tops, triple tops, double bottom. You have to understand what the story it tells us. So for example here, what I can see is buyers are getting exhausted, and if you understand order flow, you know that it's just strength between buyers and sellers. And as you watch the candles, you get impulsive seller candles, and then we have a correction, impulsive correction, impulsive correction. This shows us that the sellers are in strength for this session. So I think that is the signals that give us sellers being in control. We have large bearish candles, we have more consecutive bearish candles. Sometimes volume isn't the best. You won't have large bearish candles going from key level to key level, but what you still have is the formation of more bearish candles rather than bullish candles. Okay, so right now we are around 21 pips in profit, so you can just let this drive. Let us look at GJ. So fundamentally, just by taking a glance at the daily, you can see that GJ is making consistent higher highs, and fundamentally, I want to give you the reason fundamentally on why GJ is doing this. So when we trade GJ, it's Japanese pound against it's British pound against the Japanese yen. So with the Japanese yen, the central bank of Japan, the Bank of Japan, is currently using the loose monetary policy to ensure the import and export business is booming and to get to negative interest rates so that they can maintain their balance of trade. On the other side, the British pound, the Bank of England is increasing rates to curb inflation. Since during the pandemic, there was an increase in inflation all across the global markets. So the Bank of England is trying to control the inflation by increasing rates. Increasing rates increases the price of the currency, but decreases inflation as a result. Okay, so you can write that down somewhere. And on the other hand, Japanese yen is having their interest rates in the negatives because they want to quicken the inflation to catch up to the global standards. And also it's favorable to their balance of trade, since the Japanese are majorly based on import and export businesses. That's what holds the economy for Japan. So that's why. So as you can see, this going from down here to up here is just weakness in the Japanese yen and strength in the British pound. That's basically it. So until we see a shift in the monetary policy of Japan and Bank of England, higher time frame fundamentals and technicals align to tell you that price should be going up. Okay, if you have any questions, you can leave it in the chat. What else? So Japanese yen is a safe haven currency, and the British pound is a risk currency. So safe haven meaning that whenever, due to their loose monetary policy, whenever there is fear, uncertainty and demand in the markets, investors pull their money out of risk assets into safe havens. Safe havens include the dollar index, the dollar currency, which is the global reserve currency. We have the Japanese yen and the Swiss franc. So the Swiss franc is because of the banking system and how secure it is. It's been a safe haven for a lot of investors. The Japanese yen is due to their loose monetary policy, and the dollar is due to it being the global reserve currency. Okay, so right now we don't have any fear, uncertainty and doubt in the markets, such as maybe bank collapse, the pandemic, wars, nothing like that's going on. So risk currencies are gaining strength over the safe haven currencies. Okay, so with that you can see that GJ right now is doing a pullback. We can drop on the intraday time frame, the 4 hours. So here is where you plot your trades. You can have a trend line. So we can expect the pullback to bring seller strength down all the way to 179,500 before seeing the continuing in the bullish trend, because buyers are exhausting and closing out their positions as sellers are entering into the market to give them the liquidity. So with this information, you could either take buys at 179 going up. You could take your buys at the break of the highs at 182, or you could wait for price to make a support, and as it makes the support, you could watch it on the lower time frames, PPL to PPL. So when trading Japanese yen, you can understand that the PPLs are price points of interest and psychological levels where price has sensitivity. So right now, if you want to know a support is being formed, you can have an order block right here. Then it could close above. When it closes above, you could know that the market has shifted structure. As you can see right now, we have bearish structure. So if you have a double bottom telling us that sellers are liquidating their positions as buyers are diving into the market. So closes above here, above 180,800 could show us a shift in market structure, and you could look to execute for 40 pips, 60 pips. So that's basically it for Japanese yen and gold. Those are the trade ideas that we have at hand. So let's go back to watching gold. So as you can see right now, gold broke through. This is a good sign, but broke right back up. So what you can do here is watch this zone. If price closes above, this shows you that there isn't enough liquidity to break below 1950-500. So price is potentially going to do a deeper pullback, collect liquidity, then drop down. So that's basically it on how you can manage this trade. Look for 1 minute candle closes above 152, 100. And to continue the trades, we'll have to wait for a close below the 1950-500 level. Right now, we're still playing around this zone. there isn't enough volume, so we can wait for the new hourly candle in 20 minutes and the New York Open to give us a little bit volume to drive price towards 1945. So if you have any questions, you can ask away in the chat. Oh, I should also play some music. Spotify. I'm not sure if I play copyrighted music, if they'll take down the stream, but let's wait and see. If they'll take down the stream, but let's wait. For those who play FIFA, I like the soundtrack to FIFA 23. So how's the volume? I hope the volume is.
No one knows what it's like to be me, be me. No P, just living life as a teen. Go downstairs, switching on the TV. Got a tin of beans, got rips in jeans, that's me. Shout out to my man at the stand with the good grades. I've known him since school days. Sparky carpet, yeah, he got 2 trades. Works in a bar on Tuesdays. Spud with a frown, I'm two-faced. Can't trust, I guess it's a new wave. Graph on the wall, you should see how the dude sprays. T-shirt dirty with food stains. I like the moon glaze, made money off beats like Blueface. I'm mint, no toothpaste, hear my voice, turn up the tunes, mate. Don't wanna be too late. Last night I lost my new chain. Kick their fence, they need a new gate. Put a double knot in my shoelace. No one knows what it's like to be me, be me. No P, just living life as a teen. Go downstairs, switching on the TV. Got a tin of beans, got rips in jeans, that's me. Why? Cause my P's hard, don't go spend your advance on Gymshark. Spent all my P in a cheap bar, it's calm, held 4 pints in my left arm. 1 pub quiz, got a free car. Got chapstick, no lip balm. Got a new bike, no kickstart. Old lady in the shop, call me sweetheart. I'm never that guy, 5th gear, riding around in a drop top. It's more like how are you and can I use your personal hotspot? Cause my data ran out last week and I've gotta use my laptop. I'm trying to place a bet on a horse this week in a suit at Ascot. No one knows what it's like to be me, be me. No P, just living life as a teen. Go downstairs, switching on the
So price is falling down beautifully.
Beans, got rips in jeans, that's me. No one knows a teen. Go downstairs, switching on the TV. Got a tin of beans, got rips in jeans, that's me.
As you can see, price is struggling to break the 19,500 area, but our trade is still okay since we entered on the key level. So let us watch the reaction at 1950. So if price impulsively breaks through, we'll be fine. But if it struggles, we could look to manage our trade. Right now, price is currently at 23 pips in profits. Price hasn't yet closed above our area, so we're still good to drive down. We also monitor GJ. So right now we're having a double bottom showing exhaustion, but you can't enter buys right here. You need to wait for market structure to form. This is what you could monitor. Gold is still struggling to break below. Maybe we wait for the next hourly. You could move your stops to break even. Because during hourly opens and session opens, it price aggressively pulls back. The pullback plays are often common, and it could stop you out. So rather than losing the trade, you could get out at break even. So as price is cooking, we could talk about market structure, road mapping, perspective. So first, understanding market sentiment, having a bit of fundamental bias, having these key levels being respected, road mapping trades ahead of time. So these are all confirms that are building up and increasing your confidence as a trader. So you still have to backtest the concepts and how to identify market structure and changes in market structure by looking for impulsive moves and corrective moves, whether buyers or sellers are in control, whether higher highs or higher lows or lower highs or lower lows are being printed, whether you want to identify that with a trend line, you could identify that with a trend line. Others prefer using channels, wedge pattern, it doesn't matter. Just use what's best for you and how you can identify market structure. You could even use moving averages. So then look at what price does when it breaks out of this market structure. So for example, if we have an ascending bullish bucket turning bearish, what are the cues, price action signals you'll notice? So this is what I am trying to talk about. Breakout tests previous lows, previous highs, generating liquidity, then breaks to make a new high or low outside that structure. So right now gold is still forming an order block on the 1 minute, showing us there isn't enough liquidity to break below 1950-200. So maybe you could get a deeper pullback to collect more liquidity and drop down. So if price closes above here, you could close out your trade or close at least a percentage, 50% or 75%, whatever is comfortable for you. You could leave your questions in the comment section and I'd look to answer them one by one. So you'd like to learn how to make money on gold? Okay, so before you actually start making money on gold, you have to understand what drives price and how price looks like during market shifts and how the market structure prints out. So you have to work hand in hand with the fundamentals. So for example, gold is a safe haven. You don't want to look for fear, uncertainty and doubt in the market for gold bulls. And if the market is quiet like right now, gold is bound to make lower lows. Also, something else that you have to look at, since gold is traded against the US dollar, you can look at the DXY. So this is the dollar index. Let us use the line chart to make it easier. So just taking a glance at the 4-hour, we can see that the DXY has slowly been losing strength. And this is because, so you see, this is where fundamentals have to be part of your confluences. The reason why the DXY has been bearish is since the Feds are decreasing. I mean, they're not actually decreasing the rates, but the rate at which they increase the interest rates has been slowed down. For example, the last FOMC meeting, there wasn't any increase and it was just skipped. And they make it data dependent in that they look at the labor market, and if the labor market can handle the interest rates, then they'll increase it. But that's outside the point. It's difficult to start from I mean, we have all the time, so you can start. So right now, let me just explain the trade fundamentally, the trade that we've taken right now. For the short term, the USD has been bullish. So the USD being bullish, and since gold is traded against the USD, gold is going to be inverse that. Okay, so that's just basically how you can just use the DXY as confluence to enter gold trade. So that's one confluence. So we have the VIX, the volatility index. So what is the VIX? The VIX just tells you how the equity markets are doing. So when the VIX is booming, making higher highs like around this time, so with VIX making higher highs, this means that investors are selling stocks. Okay, so if investors sell stocks, where is the money going to? To safe havens. So safe, and gold being safe haven, money moves from the dollar towards gold and other safe haven currencies and assets. So right now the investors are making, so the VIX is making lower lows, telling you that investors are buying more stocks. So investors right now are moving their money from safe havens to risky assets. So gold is a safe haven, so money is flowing outside gold, going towards the equity market. So we can check it out on the US 30. US 30 is the equities market for the USA. So as you can see, investors are making higher highs on US 30, telling you that their money is actually going out of risky assets towards, I mean, moving outside safe haven assets to risky assets. So this is another confluence you could use to add to your arsenal, basically, for trading gold. So that is fundamentally. So you can now drop down to technicals and check the candles. So the yellow lines you see here are my key levels. So these are price sensitivity areas and where price is likely to react. And so these levels have historical value, since I plot them on the closures of the yearly candles, the quarterly candles for each and every quarter close. Then we also have the monthly closes, and sometimes we have the weekly closes. So this is how just that's how I plot the key levels. I also have a video on the channel on how to plot the key levels. So once you plot your key levels, for example, me personally, I don't trade in between the levels. I only wait for price to come towards the key levels, and when price comes towards the key levels, I drop down to the 1 minute. Okay, so as you can see, you can tell what price is trying to tell you on the. So many people say this is noise on the 1 minute, but I don't think so. I think this is just a faster way to get the sniper entries. Since if this trade I was to take it on the 5 minutes, I'd have to wait for this bearish closure to enter below the 1953 zone. But on the 1 minute, I'm able to execute exactly at the key level and get those sniper entries. Okay, so once you go to the lower time frame, so this is how you use it. So people who constantly focus on watching lower time frames can cause a number of negative effects. So you don't want to always stay on the lower time frame. You can use it to manage and execute trades, but the constant need to enter trades looking at every candles in the lower time frame is very high. So it generally brings out over trading and causes people to break their trading plan. So the key is to look at lower time frames when the area of interest is reached. But for swing and intraday traders, you could use the 15-minute as your lowest time frame. Okay, so right now during the New York Open, you can see price is going up. So you can look to close a percentage of your trade. So personally, I haven't closed since I got a better entry. But if price closes above 1952 100, then I'll close. I won't look to keep my trade open and wait for it to take me out. But right now my stop loss is at break even. So in case price shoots up, it stops me out at break even. Okay, so that's how you can just manage this trade. Let's go back to the education. So the key is to look at the lower time frame when an area of interest is reached. So when an area of interest is reached is when you want to be glued to the screen and watch what price is telling you. So for scalpers, as right now we are in a scalping session, you always want best entries to get the highest pip count out of your scalp. So you don't want to enter 5 pips too late when your target is 15 pips and so on. So don't waste your mental strength and energy looking at confusion and junk on the charts. Just mark out the key levels and the area of interest when you see potential buys and sells. Okay, so that's basically it. So right now price is heading towards the area where I said I'd close my full position, and that's what I'm currently looking to do.
This may be a mistake, but I want your tattoos on my shoulders. If you was bubbling in pain, I'd raise you to the sky and toast this hopeless. So now baby, hold on, pushed you back for so long.
As I told you, during session opens, so as you can see, I've used this indicator to show me market opens. So during this market open, pullbacks are common. So right now we are experiencing one. So if price comes above the key level, that invalidates our trade and we can look to capitalize on other moves. So if you have a specific question on how I execute or maybe how I trade, be more specific and I can go in depth and try to explain to the best of my abilities. So targets for the day are around 80 pips approximately. So let price cook. If you get stopped out at break even, no worries, you can still re-enter, because on the 1 minute you can see every shift in market structure. So right now I think the hourly is making a top wick. Then maybe you can drop further. You can also watch what's going on fundamentally in the markets. So I use tradeeconomics.com to get my news and market insights. So there's a difference between, so for beginners, think that things like FOMC, NFP, ADP, that's news. That's not news. Those are economic reports, and they are already scheduled to happen each and every month. So that's not news. So that's what you need to know. So difference between the news and economic reports. So news is, for instance, a bank collapses, that will be news, and new fear goes into the market and you can watch investors react to it. But NFP, FOMC, PPI, PMI, all those are economic reports which are scheduled to happen each and every month. So we can look at what's going on in gold. Also, here's another tool you could use. So we have the COT reports. So this just shows you data on what traders are doing. So the Commodities and Future Trading Commission holds all the data of what traders are doing. So here we have to look for the commodity exchanges. As you can see, so it looks difficult to read right now, but when you open it, you can see that it's classified based on each commodity. So we are trading gold. So this is how you'll read the COT reports. So gold, Commodity Exchange Inc. Okay, so we have the non-commercial positions, commercial, total, and non-reportable positions. So here is where you come when you want to know what investors are doing at a current time. So non-reportable positions are traders like us, retail traders. So a lot of retail traders are buying compared to the selling. But when you come back to the commercial, these are money managers such as hedge funds and bigger investors. Their positions are largely towards the short side of gold, so they're selling gold, and long positions are, so they always have positions to hedge their risk. But you can see that 300,000 compared to 20, this is almost thrice. This tells me that investors are looking to short gold. So if you get entries for short, you know that you're backed by investors, and you can see, as you can see, a lot of retail traders are buying. That means they're going long. Going long means buying, and short means selling. So this is another report you can use to increase your confidence. So back to our trade. Let's look to how we can manage. So by now you should have closed out of this trade, since the 1 minute closed above this, and you can see a shift in the market structure under the 1 minute time frame. So we have more bullish consecutive candles compared to the bearish, and also stronger bullish candles compared to the pullbacks, the small pullbacks on the bearish side. So this trade has been, so it still sells, but this trade that we entered here has been invalidated. So this was the entry, and it reached a maximum of 24 pips. This was the first trade.
Let me tell you something, yeah. That can wine.
So right now we have to watch the market for the reactions to the 1953 key level. We need to watch if it breaks above this area, if it prints new market structure above 1953. So when price is held above 1953, we can look to plot our analysis for buys, but I don't see any buys unless price impulsively goes and breaks this, then maybe pulls back for our entry, then all the way to 1965 key level. Otherwise we'll still be in sells. Okay, so we're going to watch the 1 minute and I'll show you how I execute. So let us wait for price to set up. So the most favorable position I look to take is price closes below. We have a retest, then enter here, as long as price is held below 1953. But as of right now, price is above 1953. So let's just be patient and wait for the trade to come to us. Also, gold can just do all this, and you can watch the buyers lose strength. Then you can look to execute here for more sells.
Don't feel like I could be with a gal and she can't dance.
Let's start it again.
For key levels, you could watch. I have a video on my channel explaining how you can plot your key levels. As you can see, price is still coming towards 1953. Let us be patient and watch the reactions.
toe to toe with the devil, look him in the eye with a smile, telling me he's special. No, he ain't. I ain't been sleeping in 48 hours. The life that I chose, shouldn't complain. Smoking on any ball for the pain. All that talking that you niggas do, if it ain't about money, I disengage. Canada fuck nigga turning me loose. I don't even like loose change. Oh man. I'm on a high level, ironic, I'm going platinum with a lead pencil. I'm on a high level, been to hell and back, but my body remained a temple on the talking to God level. Jesus hit the wheel for me, spit on the gas pedal. Going toe to toe with the devil, look him in the eye with a smile, telling me it's
Like this stream, like this stream. You could also share the stream to your friends.
so make you think I take calls. Flow's different if you feeling like something missing. I put that in the same song like, whoa nigga, calm down. You ain't gotta prove shit. Elephant in the room, removed it and took a look inside it. Knew I had to improve it. How am I losing? You niggas ain't really cut out for this shit. Stop making excuses. Young biggie coming up from under you bitches. I'm on a high level, ironic and going platinum with a lead pencil. I'm on a high level, been a hell of back, but my body remained a temple on the talking to God level. Jesus hit the wheel for me, spit on the gas pedal.
So right now you're waiting. If you stay cool-minded, you know when to watch the lower time frames. If you know that the market structure is same across time frames, you know candle signals are the same. If you know when there's volume and no volume, then you stick with the original analysis and risk plan, and you set your trades to break even as soon as you can. This is the best approach to take as a scalper. So as you're waiting, we could just go over basics of fundamentals. Okay, so fundamentals are the pillar or core factors for price movement. So fundamentals include understanding basic macroeconomics, central banking, economic data, geopolitical tensions, market sentiment and investor behavior, market correlations, market timing, and pricing in. So you're always going to have a combination of fundamental events at play. A lot of these subtopics work hand in hand and are very interconnected. This is because the financial market we trade is really one large interconnected web that's tied to our economies. When looking at geopolitical tensions, you want to focus more on the political side, where it's more about economic tensions and uncertainty. Uncertainties include trade wars, cold wars, revising of various treaties. Investor behavior that is induced by these fundamental catalysts is very important for order flow movements. Market sentiment is what shows you if the price movement is going to be sustained. So investor psychology ties in with the market cycles and changing market sentiment. So you could write this down. Key fundamental impacting factors on currencies include, and not limited to, central banking, monetary policy. These are the interest rates. We have economic data. We have the GDP, jobs, PMI. This shows the health of an economy. We have geopolitical tensions. For example, China-US trade war. We have Brexit. We have the Russian. So war is also part of geopolitical tensions, such as the Iran tensions, Russia-Ukraine invasions. So we also have market sentiment. This is just investor behavior and order flow. So these events have an impact on where liquidity flows in and out of. So as we're looking at gold is a commodity. So fundamental impacting factors on commodities such as gold include the supply and demand, the mining, production, transport, consumption, etc. We have geographical issues, maybe mines get blown up. We also have geopolitical tensions, the ones we've talked about, like war. We have central banking and government or authoritative bodies such as the OPEC. OPEC deal with oil, and since oil is used globally for various uses, it also impacts the commodities market as a whole. Okay, so we can go over key fundamental factors on equities. So this includes central banking, the interest rates, or the asset purchase program, or quantitative easing. We also have investor and market maker greed. We have majority of countries' corporations across industries which are heavily tied to the equity markets, such as the FANG, the Facebook, Amazon, Apple, Netflix, and Googles of US. So we also have investor psychology, market sentiment, geopolitical tensions. So our job as retail traders is to understand the fundamental impacting factors of the trading instruments we trade, and to make it simple to understand if it brings strength or weakness to the trading instrument. So how to understand fundamental impacting factors and their weight in terms of market movement? We must first understand impacting factors of the trading instrument at question, break down whether it will bring strength or weakness, assess if it's holding weight to the market makers by looking at impact on price action and market sentiment, bring information together alongside technical analysis to have stronger confidence in buy or sell side bias. Understanding fundamentals of core price movement, the why alongside technical charting of price, the how, gives us the greatest edge possible as retail traders with the limited access to resource and data we have. So you could also ask yourself why the Bloomberg terminal or the Reuters terminal is paid for around $20,000 a year, but using TradingView and other charting software is free. So that goes to tell you that fundamentals are more important than even the price action that you're looking at. So putting all those together shows you market correlation, which is a statistical measure that determines how assets move in relation to each other. I think I've talked a lot, so maybe any more questions you could just type it on the chat. I'd appreciate likes and subscribe. Okay, so right now we're just watching price as it's reacting to the 1953 key level. So I'm not liking this bullish price action, since this tells us that the buyers don't have enough strength to make the impulsive move towards 1956, which will tell us that there's a shift in market structure. So Right now we are expecting for gold to close below 1953, give us this type of market structure, then drop. So this is what I am currently looking at right now. So you could just rewind the video and you could understand the fundamentals and the technical analysis we've done from 12 months. This is the yearly chart. As you drop down till the 1 minute chart. Which we are at right now. So we're waiting for a close and stay below 1953 to continue our sell side bias. So as we're waiting, we could maybe talk about market correlation and fundamentals and currencies. So for fundamentals and currencies, as the market is an interconnected web with global economic system, there are various real-world factors that directly impact currency price. One of the main ones is of course the central banking and monetary policy alongside government policies. So key fundamental impacting factors on currencies include the central banking monetary policy, the interest rates, the economic data, geopolitical tensions such as US-China trade wars, Brexit. We have events such as bank collapses. Not long ago, we saw the Credit Suisse bank collapse and the SVB, Silicon Valley Bank. So this showed that there was a weakness in the banking sector. So having a weakness in the banking sector is new fear which has entered the market. So we can look at it on the daily and let me show you where this happened. The only reason gold broke above 2000 during May and reached all-time highs at around 2070s. So this whole move was due to the banking sector fear induced into the market. And as we know, gold is a safe haven, so investors get their money out of equities and into safe havens such as gold, the JPY. So we can look at the JPY. So when is this? This is May 23. Let us go to the JPY index, the Japanese yen. So let us use a line chart for it to look much better. So let us go to May. This whole push was banking sector failures and the fear which investors have. You could also go to GBP JPY when it made the low, since this is against the yen. So when yen gains strength, the GBP JPY goes down as the yen gains strength. Let us go back to the candle chart. So when was May? Let us look for May. So this movement towards the downside here around this place, this is when banks were collapsing, the Credit Suisse and the SVB bank, the Sovren, not the Sovren, I mean the Silicon Valley Bank. You could also look at the VIX, as I told you in the beginning of the webinar, that the VIX shows you investor behavior in the equity market. So the equities are risk assets and gold is a safe haven. So when there's fear, investors sell equities, and when investors sell equities, the VIX shoots up. So as you can see, this is what happened during that time. VIX made highs. This is telling us investors were selling stocks and the equities, and moving their money to safe havens. So that isn't a coincidence. This is actually just market correlations and a story the market tells us. That's why fundamentals are so important. As you can see, we missed the move on gold. So this is what I was waiting for. 40 pips, clean movement. So this is what I was telling you. Price won't break above this and come back below 1953. We'll expect a drop towards 1945. So, but we didn't get entries, so I won't sit here and lie to you that I took this trade since I was explaining other things. But how could we have entered this trade? There's actually no entry for me personally. There's no way I would have known this was going to just melt. So the next entry I'd look for is retests of this zone at 1950. Yeah, I think this is the next best entry. So you could look to enter right now for sales on gold. But if you missed it, don't worry. There's always time, the market's always here. So we just missed one trade as we are explaining fundamentals. So here's where discipline comes into play, because as if I was a beginner, I'd look to execute as price was going down, maybe have FOMO, execute sales, then you've executed at the lows. Then price pulls back, taps you out, and wonder what's wrong. Maybe the market is targeting you. Nothing like that is happening. It's just you being stubborn and couldn't wait for your confirms. So in my books, this goes as a missed entry, but that's all right. But at least we've broken below this, so we can look for price to drop towards 1945. This would have been a great trade if we got it, but let's wait for market structure to recalibrate. That's 40 clean pips from the key level, and it will still drop since we have no fundamentals at play right now. We're just entering based on price action. As a scalper, you should have closed this already for 40 pips, bagged 40. So here you would have bagged 20, 40, and you could call it a day. No need to overtrade. So for me, I use the 3 strike rule. I have 3 types of, not types actually, so I have 3 entries. So I either enter and win, 1 win and 1 loss. So if once I don't know how to explain this. So the 3 strike rule. Okay, so basically for me to call it a day, I could have 3 wins. That's enough for a day. If I have 2 losses, I call it a day back to back. So if I lose one trade, then I lose another, I call it a day. But if I lose one, then win one, I still have an extra trade. So that's the 3 strike rule basically. Once you go outside those parameters, then you are over trading and would likely make emotional decisions. So yeah, so we could check on GJ. So GJ has made a low and it looks like the sellers are losing strength, so we could wait for a close above 180,500, then market structure breaks, then we could look for it to drive towards the highs it made, but right now we have no confirms. So yeah, that's basically it. Don't FOMO in, don't enter trades that you weren't planned to enter, but this would have been a beautiful trade if you took it as I was explaining. You could maybe drop a W in the chat.
I've been on the front line, trying to get it in. Came from a place most never win. This is real life, ain't no editing. What I've been through is unsettling. I'm with a few guys that are on anything. Come to your block, take everything. This is England, the kingdom, the world is ours. Doggy, dog in my town. Get up or stay down. Trouble soon come around. This is the playground. Grinding for them pounds. Hope it don't come crumbling down. Already told them that the world is ours. Looking fucking 30 now. Motive isn't earning pounds. Man are gonna turn it down. Got the game cornered off. These man are just learning how. Pussy boy, you talk a lot. On the real, who's talking now? New day and I'm calling shots. Gal them I ain't calling back. Mind up in a torture rack. Holding all my trauma back. Music is the remedy. Ain't nothing you're telling me. Doggy dog in my town. You ain't up in my pedigree. Nah. Doggy dog in my town. Get up or stay down. Trouble soon come around.
So we still expect price to drop
Grinding for them
towards 1945.
hope it don't come crumbling down. Welcome to the manor, English swagger, Vincy bandana. Where man are from, no glitz and glamour. It's a daytime TV ting, too many homes are under that hammer. This cold will make your bone shatter, nobody asking me what's the matter. Smile, you're on camera, fuck off, wanker. 2 pints, bag of crisp, need a lighter for my cig. Used to ride home on a BMX like mumsy, gives a quid. With the English
Could drop your questions in the chat,
do not say a word to me.
and answer. I'll obviously answer. Nothing else to do right now. You see how beautiful it plays out when you put together fundamentals and technicals. So with these 2 trades, I'd call it a day if I were a scalper. But if you're an intraday trader, you could look for it to drop towards 1945. Down.
Life moves up and down. You gotta figure it out. Got no time for these fake guys. I don't move with no
So
grinding for them pounds. Hope it don't come crumbling down.
see the open DXY gained strength as gold dropped. Damn, that's a beautiful drop. So we're around 50 pips and dropping. Beautiful price action. Right at the key level, trade taking from key level to key level. So that you know this isn't maybe guessed or anything. This is something I've done during all New York sessions for the past 2 weeks. Price has been doing the same thing time and time again. When it comes below 1953, here we got 30 pips. Price drops to 1945. Could back test it. So here price didn't make it. So this is why I'm telling you, when you look at the higher time frame, so let us go to the 4 hour. When you roadmap and plot where you expect price to move and enter on pre-planned analysis, you gain confidence, and over time you become a better trader. So this is what I did. Nothing crazy. I entered sells here, buys here, buys here, sells here, sells here, sells here, buys over here. I took a loss here trying to guess when price would reverse, but entered another buy here. Price came up to 1965 key level, took a sell. So now we are on our way down to 1945 as earlier outlined. So this was a trade I took over here, closed here. We could have taken yesterday. In fact, I took this trade yesterday, then today we have the same trade. So price does what it did historically when there's no new fundamentals at play, so it will just range. So what you do, you execute for optimal entries below here at the range lows, sells at the range highs, buys at the... It's just a game you would play all day long. So back to our trade. You can see the drop, still dropping. For those who executed on this pullback, made right now you are up 23 pips. You could close it and call it a day. For the intraday traders like me, you could still hold it towards 1945 as you watch market structure. So today the only trade that was available was this one. I haven't seen any trades on GJ since I only trade these two currency pairs. Also for you to master something, you cannot take more than, I mean, you can use other currencies for confluence, but you should master one pair, two at most, then learn the fundamentals behind it, what pushes price and how it reacts on the key levels. As you can see, price is still dropping, so around 60 pips.
Put me through living hell. Time and time again, when me see you at the party, get up, stand up and run the way you put it on me body. Oh, me feel it alone, now you alone get me so naughty. You make me fall in love, me shoulda listen to me charge it. Why you make me feel away, my body controlling me. You gave me that fire, now we burn, burn, baby. Look at what you do to me, take over my energy. Should I know you're never good for me? I know you make me happy. Run, 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 run. Me happy, run, run, run. You make a good girl happy. Run, 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 run. Just to protect my love. I know you make me happy. Run, 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 run. Me happy, run, run, run. You make a good girl happy. Run, 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 run. Just to protect my love. Like when more you want can get your me ringing down your phone. Just to get some of the good love when make me tremble and amount. Lose control if me get a scent where similar to your cologne. Want your but no need it, that's just how I feel. Oh, 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 we both know. You're not right for me, so I better you go. Yeah, I'm done, 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 done. Now wait till you settle down. Now I'm gonna make you left your spell on me. Why you make me feel away? My body
Also, by doing this live, I also increase my confidence when entering the market. That's why I'm doing it on YouTube, to have a journal, a live journal on how I react to what price does. Be welcome to any questions you have. But right now we're just riding this gold sales. I missed this entry, but I entered around here. I've closed 50% and letting the rest rock towards 1945. So with GJ, let us look at our higher time frame analysis. Let us go to the 4 hour. So you're still expecting it to drop to 179 for us to look for buys. Also, let us look at the daily and look for key levels from the last time during the pre-Brexit highs. This was the area when Brexit happened, then it started to drop. So we could look for price sensitivity areas. So right now price is so I think it does have a rectangle. So a close above here would be nice for GJ entries. Let us reset chart view. So I'm only looking for buys above 180,500. Right now the pullback plays could go all the way towards 179,500. We didn't check this trade since price didn't line up. So here's another on the hour. In fact, it's spot on the price sensitivity area on the hourly. So let's just wait. But as you can see, price made highs and the buyers didn't have enough liquidity to break past these highs. So the pullback might be a little bit deeper towards 179,500. Then we'd watch the price action on the lower time frames for execution. Look at gold, isn't it beautiful what gold is doing right now? All this was done live, beautiful, for 80 pips. So I think I'll end the stream here. because I think we've done exactly what we were expected to do. Okay, so see you tomorrow, same place, same time. Share the live stream. Please like, comment. You could reach me through my socials, Sovren FX, all through Twitter, Telegram, Instagram. Yeah, so we've done everything live, and you've seen price play out exactly how we had analyzed before price even reached here. So that's basically it. We had 2 trades for the day. We'll wait for GJ to cook and maybe execute later during Asian session. But for Asian session, you have to join the group. You could also join the Telegram, the free Telegram, for free updates. So with that, see you tomorrow.